Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the top disruptive stocks to buy this month. Now, disruptive stocks are going to be stocks that are one, growth stocks, two, disruptive in their sector. And I think a lot of these stocks carry so much long-term potential, but anytime you look at a growth stock, you always have to understand growth stocks in general are a little more volatile than traditional like value stocks or blue chip stocks. These are going to be going up and down at a little more of a rapid rate, but have an outlook that is way larger than a lot of value stocks. So I think it's always smart, be diversified and everything like that, but don't be afraid to dabble into some of these companies. Do it with caution and you guys will be just fine. But by far, the most common growth stock we know is Tesla. And you have to have this outlook because back in the day, Tesla, look at in here, for years, Tesla didn't move a whole lot, right? You guys can see it barely even consolidated, didn't do much. But then the outlook shift, a lot of people bought into that and we had this huge buying pressure ever since, okay? So the very first stock is a stock that pretty much we all know of, but it's by far one of the stronger outlooks for this sector. It's ticker symbol DKNG. Now this is DraftKings Sports, so you guys can see the volatility is there. You know, it went from $17 all the way up to $74, which is a return of 280% before selling off back down, and it fell about 20%, about 19%. So you have to understand there is volatility there, but look at this. Let's actually remove these drawing tools, and I want to show you guys the overall growth. You guys can see it has that beautiful upward trend. Does have a little resistance here at 74 to about 64, but the overall outlook for DraftKings is off the charts. They have increasing revenue. They don't have too much long-term debt, which is fantastic. The overall growth outlook is around 50 to 60%. And I think that's a very fair expectation. The reason why I say that is because a lot of people are shifting to this online gambling world. And I think that DraftKings is definitely that, that leader in that sector. And I think they're really going to dominate the next quarter in the next couple of years. But the outlook for this is perfect. It's by far one of the most disruptive stocks out there. If you can compare it to like other gambling or casinos, DraftKings margin is extremely high because there's really no brick and mortar store compared to like a casino, which has a ton of overhead. DraftKings is very little because they just have that app and some software. Stock number two is one that we've talked about several times on the show. It's SOFI Technologies. So yes, it is volatile. You know, went from $10 to $28, sold off back down to $15, back up to about $25, sold off back down to $14. So you guys can see it's a little more volatile, but SOFI Technologies, what it is, it's actually a fintech stock. So it's a financial technology company. What they do is they have a variety of things from online loans to buying and selling stocks, crypto, credit cards, debit cards. And the beauty of it is they allow everyone to keep their, all of their finances on one app. And I think that's fantastic because a lot of people will have, their bank, they'll have a Robinhood app or an M1 Finance or TD Ameritrade. With SOFI, it's all in one. The outlook for this is it's one growing way better than a lot of analysts thought. And not to mention, they're rated to grow right around 40 to 60%. And I think that's very fair. The only thing that is, a little concerning with SOFI is there is a little more competition in that field, right? We have Robinhood getting into that sector, M1 Finance getting into that sector, which is, keeping everything all in one. Before they just had their brokers and that was it. Now Robinhood is dabbling in a checking account. You can start taking out loans with M1 Finance. So SOFI does have a little more competition, but it's still there. The revenue is still there, and increasing in user basis is growing at around 35 to 50%. So that's fantastic. So the next one here is one that I've looked at in the past. It's ticker symbol U. This is Unity Software. So you guys can see, yeah, it's more volatile. Went from 65 all the way up to 170. That's a return of 150%. It's sold off back down to about that 90% and really didn't do much until recently when we had this short-term upward trend, which is beautiful, this beautiful upward trend in the past year. The return for the year is right around, I believe, 50% or so. That's a very fair return for a year, compared to the S&P 500, which is, it's given a return of a year of about 33%, which is crazy. This one's a little better. Obviously, they're a software company. Software is growing extremely fast, but there is a little volatility because there is some competition in that sector. If we actually go to the yearly chart, you guys can see it does do that up and down more at a little more of a rapid rate, but the growth is still there and the return is still there. I think it's always smart, be diversified into companies like this because you never know, and I think the growth that this company has seen is going to be killing it within the next really probably 3 to 5 years for this one. Stock number 4 is one that we are buying, and I already bought a little bit last week, but it's Zillow. Right, Zillow is volatile, right? $70 all the way up to $280, sold off down to $96. So when you buy a growth stock, you always want to buy on a discount. That is probably the most important thing. You want to make sure you guys are buying a high quality stock at a very low price, right? Because the reason why is because you're buying a stock that's on sale and you have that outlook, not this 1 month outlook that 99% of people have. You have an outlook of well over a year, probably 2 to 5 years. That's kind of the growth outlook that I look at. So Zillow's growing extremely fast. They make a ton of money, and the volatility is there where you can actually buy in one on a very strong support line of around $88. So you guys can see we got buying pressure back in here, buying pressure back in here. So you're virtually buying on a major discount when we have a tendency to see a lot of buying pressure there. So you hop in, you could even set your stops below like $70, $75. So you risk, $10 or $20 to have this return if one comes up to the nearest resistance at 150. So you're virtually risking $10 to make $50. And if that breaks out, you could easily go to 208, which is the overall major resistance there. But I think the overall outlook, 1, you could swing trade this. 2, long-term investment all day. 3, it's growing extremely fast. They make a ton of money. And honestly, it's super convenient because Zillow is obviously that disruptive company in the real estate sector. They make a ton of money. You can actually manage your rentals on there. You can post a property you guys want to sell all in one place. So it's beautiful, beautiful growth, and it's more of a long-term outlook, but the volatility is still there. So stock number 5 is one that I bought about 2 years ago. It's Shop. Oh, I spelled it wrong. It's Shop. So Shop is Shopify. So Shopify is an e-commerce site that allows pretty much the everyday guy to open up a Shopify account and be able to sell online, right? And how they make money, and they make money in a variety of ways, from fees to recurring services and when you want to keep your site up, and a variety of other things. But look at the overall growth we've seen in the past year. So it's definitely there. It's a little more of an expensive stock, so obviously good strategy. Dollar cost average this because you guys can get in on these discounts. But the biggest thing is growth. Shopify is growing extremely fast. A lot of people thought it would slow down after, the overall lockdowns kind of got lifted, but the growth is still there because e-commerce has really proven to be extremely convenient. And I think we'll look back in the next 2 years and realize we wish we would have bought more of Shopify because of the absolute growth we've seen. I would not be surprised if this thing hits $2,000 by next year. I just think it's that strong of a company to look at here. Now, the last one that we're going to be talking about is a very, very popular one. It's COUR. I believe it's Corsa. So Corsa is pretty much it's a site that allows people to take online courses. And I honestly think very similar to Shopify, the past year proved that learning online is, 1, possible, and 2, extremely convenient because most of the time it's a self-paced work. And that's what Corsa really has proven, that 1, you can take these high quality courses online. You don't have to really go to the college place. You can take a course that's $150, $200 and get a ton of education and a ton of value out of it. And the beauty of this site in general is they have extremely high profit margins because their overhead is so low. So I think that this would be a great one. You guys can see it's sold off down to $39. It's under $50. Major support here at $34. It's just an absolute no-brainer, guys. So for me, these are the top disruptive stocks that you guys should buy. All of them have that outlook, like I said, 2 to 5 years. The growth is there, and I hope you guys enjoyed the episode. I hope you guys learned something, and if you did, hit that like button and subscribe, because at the end of the day, it really helps me out a ton. So that is it. I hope you guys enjoyed it. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.